What's going on, guys? D. Anthony here with Evolution Traders. In this video, I want to show you guys how you can stick with the trend, how to avoid getting chopped up, and then wait for actual change in trends to go in the opposite direction. So what we're looking at is the 5-minute time frame. We're looking at the NASDAQ 100 futures. For all my prop firm traders out there, for all my futures traders out there in general, this is going to be perfect for you. So what I have on my screen, the purple line, 20 SMA. The yellow line, 200 SMA. The dotted lines that you see on the chart is the first hour highs and the first hour lows. Now, the first hour, what I'm classifying as that opening range is between 9 a.m. and 10 a.m. Eastern Standard Time, okay? 9 a.m. and 10 a.m. Eastern Standard Time. Market's going to open up at 9:30. So we're going to take 30 minutes of that pre-market. We're going to take 30 minutes of the market open, and we're going to make that our opening range. So what I want to see, okay, you essentially do not need to even trade the first 30 minutes of the market. What you can do is allow the market to do whatever it wants to do, right? Allow it to do whatever it wants to do. Allow yourself to get a range. Once you have the range, then you're going to see where the trend is starting to develop and where potentially you can take some trades. So what I'm looking for after the first hour candle, after the first 30 minutes of the market opens, after 10 a.m. Eastern Standard Time, is I'm looking for the highs or the lows to get taken out and confirmed. So what I'm looking for is first hour range gets taken out to the downside. I'm looking for a following candle to confirm, and I'm looking to get in, scalp, and make some money. Okay. Now, this move here was not a very, very big move. However, if you know what you're looking for, example, at this point in time, the average true range on the NASDAQ 100 on a 5-minute time frame is 22 points. So if I'm looking for 22 points based on the ATR, the low price area of entry should be below 17,440. Within 10 minutes, we trade down to a price of 17,425. So you can see we're getting almost at 20 points, almost that, 1-to-1 on the average true range. A lot of times what I like to do, sometimes if I'm looking for scalps, is take the ATR, cut it in half. So if the ATR is 22 points, 20 points, give or take, let's cut it in half. If we can take a trade and take 10 points, would you do that each and every single day? If you can take 10 to 15 points each and every single day by cutting the ATR in half, would you be a happy camper? I'm pretty sure most of us would. Now, here's where the troublesome spots come, because then we get the bounce, right? Here's the bounce back up into supply. We never take out the first hour opening range highs. We kind of consolidate around, and then we put in a new low. A lot of times traders will think, well, this is the bottom. They get in here once we start to break out, and then it chops around and then smashes them, and they get absolutely smoked. Until price takes out the first hour highs, ignore the long setups. Now, again, if you're a more experienced scalper, I have traders and Evolution traders in the room that I trade with each and every single day. They're a little bit more experienced. They'll know, let's put a stop loss here. We'll wait for a green candle to take out a previous red. We'll get in long and we'll take profits at supply. That's fine. But not everyone is experienced. Everyone has a different level of experience, and everyone has a different level of risk tolerance. Sometimes people can't, handle getting in short, getting back in long, getting in short. It just seems like you're chasing price all over the place. That's perfectly fine. I definitely recommend actually to stay with the trend and to ignore a lot of the back and forth moves. So until we take out the first hour highs, ignore all longs. Consider all these candles red, right? And then when you get your next setup, 20 SMA short, you take that position. Ignore all of the pops as long as we're underneath that opening range high. Take the short setup. Boom. Ignore the pops because we're still below the opening range hour candle high. Take the short. This is 1 trade, 2 trades, 3 trades. Take everything off my screen. Again, let me make this very clear. If we break the opening range low, okay, and we bounce, and we do not take out the opening range high, though on the 1 hour range that we're looking at, ignore the longs. Stick with the short setups. Ignore the longs. Stick with the short setups. Ignore the longs. Stick with the short setups. until we get back over that opening range. Makes sense? Hope this video helps and finds you guys well. I'll catch you guys all in the next one.